back again to the Compliance Kitchen. This is Sylvia, and today I want to take a look at a recent resolution by Credit Suisse in regards to a business transaction in Mozambique. So on October 19, the DOJ issued a press release in regards to this matter. The release tells us that Credit Suisse Group AG, which is a global financial institution headquartered in Switzerland, and its UK subsidiary Credit Suisse Securities Europe Limited, or CSSEL for short, we can just refer to them as Credit Suisse, have admitted to defrauding US and international investors in the financing of an $850 million loan for a tuna fishing project in Mozambique. Credit Suisse has been assessed more than $547 million in penalties, fines, and disgorgement as part of a coordinated resolution with criminal and civil authorities in the US and in the UK. So Credit Suisse Group AG entered into a 3-year DPO with the DOJ in connection with a criminal information charging it with conspiracy to commit wire fraud, and the subsidiary CSSEL pleaded guilty to a 1-count criminal information charging it with conspiracy to commit wire fraud. This resolution follows the prior entry of guilty pleas by 3 CSSEL bankers to conspiracy to commit either wire fraud or money laundering. So according to the press release, gives us a little bit more detail on what occurred. So between 2013 and March of 2017, Credit Suisse, through the subsidiary CSSEL and co-conspirators, used U.S. wires and the U.S. financial system to defraud investors in securities that were related to a Mozambican state-owned entity, Empresa Mocambicana de Atum, S.A., or EMATUM, which Mozambique created to develop a state-owned tuna fishing project. So Credit Suisse, through its employees and agents, conspired to defraud investors, and they admitted to defrauding investors and potential investors in this Mozambican state-owned company by making numerous material misrepresentations and omissions relating to, among other things, the use of loan proceeds, kickback payments to the subsidiary CSSEL bankers, and the risk of bribes to Mozambican officials, as well as the existence and maturity dates of debt owed by Mozambique, including another loan that Credit Suisse arranged to another Mozambique state-owned entity, Pro Indicus, and a different loan another bank arranged with Credit Suisse's knowledge. So Credit Suisse represented to investors that the loan proceeds would only be used for the tuna fishing project. Instead, co-conspirators diverted loan proceeds that were obtained from investors, a contractor that supplied boats and equipment for the Mozambican tuna company, and that received the loan proceeds from Credit Suisse, paid kickbacks of approximately $50 million to the Credit Suisse subsidiary CSSEL bankers, and also bribes totaling approximately $150 million to Mozambican government officials. The DOJ also tells us that Credit Suisse admitted that it identified significant red flags prior to and during the financing of the Mozambican state-owned tuna company. For example, Credit Suisse had learned of significant corruption and bribery concerns associated with the contractor. In addition, in about 2015, Credit Suisse became aware that the state-owned company had encountered problems servicing the loan, raising the risk of default. Credit Suisse agreed to arrange restructuring and exchange of the original security into a bond with a longer maturity date. During the restructuring, Credit Suisse employees raised concerns about corruption allegations that were made in the press and disparities in the use of loan proceeds. To address these concerns, Credit Suisse retained 2 independent industry experts to conduct a market valuation of the Tuna fishing boats and other goods the contractor provided for the project. Credit Suisse knew that the experts identified a shortfall of between $265 and $394 million between the funds that were raised for the loan and the fair market value of the boats and accompanying infrastructure and training the contractor sold to the Mozambican state-owned tuna company. Credit Suisse did not disclose this material information to investors during the restructuring of the loan. Aspects of Credit Suisse fraudulent conduct were revealed beginning in April of 2016, causing the price of the Mozambique state-owned tuna company securities to drop, resulting in losses to investors. So that's the background story on this. Under the terms of the agreements reached with the DOJ and the UK's Financial Conduct Authority, or FCA, Credit Suisse's penalty is approximately $247.5 million. After crediting by the Department of Justice for payments to other authorities, Credit Suisse will pay approximately $175 million to the U.S. Credit Suisse has also agreed to a methodology to calculate approximate fraud loss for victims of its criminal conduct. And they also reached separate parallel resolutions with the SEC and the FCA, which is the UK's Financial Conduct Authority. So, Credit Suisse did not voluntarily disclose the conduct to the DOJ, and as a result, the release tells us that Credit Suisse received only partial credit for its cooperation with the DOJ's investigation because it significantly delayed producing relevant evidence. Now, Credit Suisse has agreed to continue to cooperate with the DOJ and to enhance its compliance program and internal controls, as well as to provide enhanced reporting to the department on the Credit Suisse remediation and compliance program. So, again, as usual, this is a summary. If you guys want to take a look at the complete press release and also an article that was covered by Bloomberg, I have links to both available to you on compliancekitchen.com. As always, thanks for stopping by.